Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Alice Ankerstar, and today we'll be talking about the Nasdaq bear market, Google's buyout of the cybersecurity firm Mandiant, and today's Apple peak performance event. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Nasdaq officially entered a bear market yesterday. What should investors do in a bear market?
And yeah, that's it's no fun. Yesterday was a huge off day in the market. If you can see this all the way to the far right, you see that big red stripe down. I heard that it's the worst day since 17 months or something in the S&P 500, which is the chart that we're looking at. So yeah, pretty brutal day. It was one of those where you just had to walk away and check back tomorrow because there was just no hope for it. So that's where we are in the S&P 500. You can see the technical indicators down at the bottom both show overall oversold conditions, but the S&P itself is not in the bear market. The one that is the Nasdaq, which again, this is now switching charts here to a one-year chart. So a bear market is marked by the 20% off of the most recent high. You can see the most recent high here in November of 409 basically, and now we closed at 324. Interestingly enough, we're at the bear market point not too long ago, though it's at a little week and a half ago. We were down in this area in the Nasdaq and it held, which is a good sign. But after the big move up, you can see the big green bar there that we had. It basically petered out and then sold off from there. So what's driving it? Sure, the Russia-Ukraine crisis, gas prices, inflation, Federal Reserve awaiting their announcement on interest rates. There's a lot of things weighing on the market. I think really though that it's the negativity of the Ukraine Russian crisis, Russia situation that's really kind of driving the sell-off because people just want to wait for certainty before they reallocate their capital. So I do think it's temporary. I am a buyer here. I will tell you, the question you asked there, Allison, is what do people do during a bear market? I think that largely the major moves in your portfolio have been done. So again, as the market started to fall, once we hit that around 10% down point, that's when you start making, get rid of speculative stuff in your portfolio. Only stick with your best of breed, kind of those workhorse type stocks. And now that we're actually in the bear market in Nasdaq, which is tech, basically, you can sell. But what you want to do is if you sell, you don't want to sell out to cash. Kind of that situation's behind you because you don't want to miss the snapback, right? So now, but you can sell as long as you buy something better in your portfolio. So an example, we're going to talk a little bit about a buyout in Mandiant later, in the show, but in a situation like that, it's kind of like that story's already played out. Now you can take those funds and move them into another firm that has more upside during the snapback. So that's what you can do in a bear market, or you simply just hunker down and hold. The jokes coming out of last year was the diamond hand, and I'm not selling and that sort of thing. Well, you really do want to be a little more determined in your investing once you enter bear market. That's when really the only way to really hurt yourself is to sell out. And when you go back to the 3-year chart, just imagine when's the last time we were, faced a big significant downturn was back here in March 2020. Went down 35% in total, right around the 1 month time frame. It was pretty brutal. And it's one of those things that the only way to really hurt yourself, the only wrong move to make is to accept the full move down and then go to cash. Okay, and that's what a lot of people think that. Okay, if the market drops 20%, clearly it's going to zero. I'm out completely. And if you go to cash there, you lock in the gains. Now, we talked about selling and moving to a better name. There's also an opportunity here, depending on how savvy you are with tax loss harvesting, is you can, and you have to navigate the wash sale rule, but you can take advantage of these downturns to sell in a taxable account, and accept any losses or reduce the gains, if you will, to buy something else. So that when that appreciates at the end of the tax year, even though your accounts bounced back like we saw in 2020, you can be up for the year, but show several $1,000s in losses if you sold during the bottom there and moved to a non-similar investment, if you will, because that'll catch you with the wash sale rule. So a little bit tricky there, but a lot of folks are like, how did I have a bunch of losses and my portfolio's up? And it's like, well, that's tax loss harvesting. You have to be very careful what you do there. But there's an opportunity for that, which I really enjoy. So, in conclusion, what do investors do in a bear market? You kind of need to just be patient, sit, and hold. If you make any major moves, you want to make sure you put that money right back to work, because when you snap out of the bear market, that's when you get those huge upside gains.
Next, Google purchased cybersecurity for Mandiant yesterday. What does this mean for both Mandiant and Google stock?
All right, let me pull up the article here. So Mandiant is the old FireEye, and we have that in the book. So we held FireEye as one of the individual cybersecurity plays. And, the cybersecurity is one of those themes that's going to be around forever. I think so. I think, in the military, we were talking about the mouse and the mousetrap. The weaponry gets better, and then your ability to combat that weaponry gets better, and then the mousetrap gets better, then the mouse gets better, and you can continue to go back and forth. Well, I view cybersecurity that same way. I think hackers will be getting more and more creative and better at what they do, and then the defenses need to match that. So it's a great place to invest money. If you get into the individual names like FireEye, which now became Mandiant, which is now being bought by Google, you're going to see major purchases like this. I think this will kick off a little bit of M&A, mergers and acquisitions, where people are going to try to bring cybersecurity in-house. So in a situation like Google, which is a huge company, now wants to basically buy a cybersecurity firm to be able to assist it. The question becomes, will it go through? If you can see this, pay 23 a share. This should go through later this year if it gets passed. Well, why wouldn't it get passed? Well, this is the second largest deal of all time, behind Motorola, and it's Google's second largest deal. Behind Motorola, the $12.5 billion Motorola deal in 2012. Okay, so it may or may not get passed. So when you look at the stock of Mandiant, MNDT, it's interesting because the buyout was listed at $23, right? And you could see the stock hopped up to the $23, basically level when it, was announced, right? Because obviously the stock's going to sell for that later this year. Well, why wouldn't the stock be up there now? Why would it have sold off down to where it's currently sitting at $21.75? And why wouldn't it be a screaming buy here? Well, you have to think there's a chance this doesn't get approved. And if it doesn't get approved, the stock was below 19 before the announcement. So there's a chance if it doesn't get approved, months from now, the stock drops back from there. So really you're looking at a risk reward scenario where, in a absolute best case, the merger goes through and you make, if you buy it here today, call it 22, you make a little over $1 a share, 8 months from now. But if it doesn't get approved, you're going to see the stock fall, $3 or $4. So that's a risk reward situation that, most people don't find attractive. So that's why the stock's probably going to bounce around in that 22 range for a while until it gets really close to getting approved. And then as soon as it gets approved, it'll jump right around that $23 level. Now, the question is, what does it mean for both stocks? Well, I wouldn't touch Mandiant here. We'll be looking to move out of the positions we have in Mandiant, take the gain, right? It went up to 22. That's fine. We don't need to hold out for 23. Now, when you look at Google's long-term stock, look at a one-year chart in Google, I think it's a screaming buy. It touched 3,000 back in here, down at 2,500. It's been a buy, this whole time from the past couple of weeks. But really, you're looking at the stock split, the 20-for-1 stock split that's coming up sometime this year in 2022. I think that will move the stock higher when it becomes a little more attractively priced for folks. But there's a lot to like with Google. There really is. So I'm pretty shocked that it's, when you think of the bear market and things selling off, it's also, stocks on sale. So this is one of these that, in sum, I think this is a great buying opportunity for Google.
Last, Apple's peak performance event is today at noon Central Standard Time. What can we expect, and will it move the needle on Apple stock?
All right. Well, there's a whole bunch of new exciting things coming out with Apple. Of course, I'm an Apple fan, so I try to stay unbiased. But I do love the company. I do love their products. One thing that's probably been it's almost overdue, if you will, is this new iPhone SE with 5G. People are saying it's the Verge, excuse me, if you follow them at all. A lot of they're pretty close when they're on their tech stuff, but it's really an iPhone SE3. So you think, okay, we're on what, the 13, and we get all the bigger numbers, but really it's kind of going back and making an affordable iPhone. So budget friendly, they say, not necessarily affordable because that can offend people, but sure, budget friendlier than spending $1,000 on an iPhone, right? Let's make one that's around that $300 to $400 area, a little more affordable for folks to be able to have this capability in their hands. And A15, the Bionic chip, 5G capable, and some upgrade memory from back where the iPhone, the SE3 or the iPhone 3 was back in the day. So that's one of the things that's coming out. Also, there's rumored that the M2 chip is coming out in the new MacBook Airs, which are down here. There's a new iPad rumored to come out. There's the MacBook with the new M2 processor. So, the M1 processor is pretty amazing. And now we're off to the next gen that wasn't quite ready last time. So overall, pretty interesting. Some different studio things are coming out that I don't really have my hands around, but what's not expected, the headset that Apple's been talked about, that's not going to be out for, the VR, AR product. We shall see, but they don't really expect that out. And then, of course, the Apple Car is not going to, they don't think that's going to be touched during this release. And then iOS 15.4 does allow you to Face ID enable your phone unlock it while you're wearing a mask. So if you're still wearing a mask in those situations or personal preference, you had to pull your mask down to unlock your phone. 15.4 gets you past that. So those are the things we expect. How's it going to affect the stock? Well, let's go back and take a look real quick. And I will tell you this. I think the valuation of Apple right now is a screaming buy. Here's your 1 year chart. You look, year to date, it's down 10%. So really we're up here at the 180 level. It's down at 160 level now. There's just everything really to, forward PE at 25, which is expensive overall, but really cheap for a tech firm, especially the size of Apple. So really, overall here, I think Apple is a screaming buy along with Google.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.